2000. All right, so let me share my screen so you can see what I'm looking at. All right, so I believe you can see my screen now. Okay, so today, Thursday, 2000 and Thursday 4th, we have a couple of slated for today. So we initially had CPI on the Swiss franc, and then it turned out to be negative. So by 1:15, 1:30, and 3 o'clock, 3 p.m., we have the news from the United States dollar and this unemployment claim and ISM service PMI. Now, if we look at the forecast for the unemployment claim, the forecast is anticipating a much higher number, something higher than the previous. Forecast is saying 230, and the previous is 9. And then the PMI, 9, that's the forecast, and the previous is 50.1. From the look of things, the forecast is anticipating a higher number, a higher value for the news that we are expecting. So which means there's a tendency we should see something much higher than that is what is in. So hopefully by that time, see good movement in the US dollar. But for now, this morning we may not have much volatility in the market. So, but let's go to the price chart and then see what we can make of the chart for today. A couple of instruments, we're expecting movement. So whenever the market or the calendar is a bit scanty, so like for today now where it's scanty, I normally turn to another. Oh, so let me just quickly share this page. So I'll be sharing this page that contains client sentiment. So it's called client sentiment. So what I'm looking for here is the instruments that are likely to move. So I share my screen. So what I'm currently looking at now is the retail sentiment of the major currencies. So from my screen, you notice we have a couple of instruments that are likely to give us good trading opportunities. The ones you see on this left-hand side, right-hand side, so we have currencies like Euro Pound, Euro JPY, AUD CHF JPY, Pound CHF, and NZD JPY. We also have oil. These are some of the currencies that are most likely to give us good opportunities until when we have the high impact news release. One of the instruments I'll be looking at this morning is USD CHF. But before then, we can also take a look at Euro USD. We'll start with Euro USD, and then we'll look at USD CHF, and then look at a couple of other instruments. Once again, apologies for starting behind time. It's not intentional, because some technical issues I had. Let me share my screen so that we can start with the technical analysis. So I'm sharing my MT5 now. So if any of us have any question, if you have any question based on the analysis or any of the things we have been discussing, to drop your comments. While I'm doing the analysis, I'll be going through your comments. Okay, someone is saying I should be loud. Okay. So I'm hoping my volume is okay now. Well, so we'll start off. Okay, yes, someone has just suggested USD CHF. That's yes. So we'll look at USD CHF. It's already on my radar. So I'll be looking at USD CHF. All right. So let's start off with the. Let's start with the Euro USD. So I think a good place to start would be the dollar index. So let's take a quick look at the US dollar index so that we can have an overview of what the US dollar do. So this is the dollar index. Dollar index is simply the dollar, the movement in the US dollar alone. So this is the dollar on its own, not as a pair with any currency, just on its own. So if we look at the US dollar, you can clearly see that we've been in a downtrend. So for like 3 weeks now, we've been heading down. Now this is the trend line from 3 weeks ago. So I'm drawing this trend line from 3 weeks ago and connecting it to last week. So you see, we were on the way down and suddenly we broke out of the trend line. We tested the trend line. So what I would have loved to see on the dollar is a retest of the trend line and a continuation higher. But we see after the testing the trend line, we are also falling back down. So there's a high tendency we might just continue lower. Now, if you look at last week, so this is last week, so I'm on H4. So this is last week. Now I'll be using the Fibonacci so that we see if the market has gotten to a discount or if the dollar has hit a discount, and then see if it's actually, so if I draw my fib from last week's high and extend it to last week's low price. So I'm using the Fibonacci for this analysis. From last week's high price to last week's low price. You can see the dollar got to our sweet spot, which is 61.8%, and dropped. So anytime this happens, anytime the market retraces to around 61.8%, there's a tendency we will see bounce back. So if we were to go higher, then it should have broken above this number. You can see here 79. Hence, it failed to break above 70. There's a high tendency to run lower. With this in mind, I will be anticipating a lower dollar for this period, for this week. But if you look at the fundamentals that we have just considered in this calendar, it's showing that the analysis is suggesting that US dollar, the news that will be coming out is likely to be positive. It's not certain, but the high tendency it's going to be positive for the dollar because of the forecast. So the forecast is likely going to be in favor of the dollar. But let's see how low this is likely to be. So I'm using another tool called the Fibonacci extension. What I'm doing with this tool is to get how low we anticipate the dollar to go. So this is the first level I'm expecting the dollar to get to, which is this level labeled in. So let me change the color to green so that you can see. So this green color, this green level is where I'm expecting the dollar to get to. And if it goes beyond that, then we'll fall down to this level. These are the support areas I'm looking at US dollar. But for now, I am anticipating lower prices in dollar. Also with the speculation that sometime in September, or most likely next week, there's going to be a rate cut based on the dollar. So there's a tendency the dollar will begin to hit for that time. So I'm expecting lower prices, and if we go to one, you can see what we have formed for dollar. So we are just around yesterday's low price. Anytime you see the market around yesterday's low price, so this is yesterday's low price, there's a tendency we will break below yesterday's low price and fall down to this level of support. But so what I'm saying in essence is dollar is likely to drop all the way down like this. All right, so that being said, we can now go over to the Euro USD. So let's quickly look at the Euro USD, and afterward we will check what USD CHF. That's in a few seconds. Euro USD. So if that is happening on the dollar index, then we should expect the Euro USD to push higher. So we'll be expecting higher prices on the Euro USD. But I think what I have noticed in recent times is that the dollar index and the Euro USD have lost their correlation. So before now, they are usually negatively correlated, whereby if the dollar index is going down, Euro USD will be going up. But in most recent times, I have noticed that that correlation is no longer there. So the Euro USD might just be doing something different from what the dollar index is doing. So the positive, negative correlation that usually exists, Euro USD and the dollar index, for some time now, I have not seen that correlation. So if you look at the Euro USD, you can see we're actually in a very tight range. So we've been in this range for almost 3 weeks. So the range I'm referring to is this region. We've been in a range for almost 3 weeks now. So this is the range. But notwithstanding, because I'm on H4, so each of these separators are 1 week. So we've been in this range, and the best trades when we are in a range like this is a breakout strategy. So most of the times, once you notice the market has fallen into it, I think the best strategy to be using when you notice something like this is a breakout strategy. So what you do is you drop down to a lower time frame, then see if you can get the range lower time frame, and then all you are looking for is the market breaking out of its significant support or resistance, and then so if we are to go by what the dollar index has been showing us, we should anticipate higher prices, that is movement to the upside. But if we look at the structural pattern of Euro USD on the H1, it is pointing to the downside. So that's a very big contrast of what that's contradiction with dollar index. So if I'm doing my analysis on USD, I will most likely be looking for opportunities for a sell. Now you notice we have just hit about 61.8%, which is this region. So from the low. So see what I've just done. So I use Fibonacci for my analysis. So that's exactly why you notice I'm drawing these levels. So I'm drawing from this high, that is Monday's high price, to Monday's low price. The highest price on Monday to the lowest price on Monday. Now I have drawn it and extended it. You can see that by Tuesday, we have traded into 61.8. Over here, it's 61.8 to 61.8, and we are now falling out from that. I think my network is unstable. You can hear me? Am I being clear? Am I being heard? Please, if you can hear me, just type a yes. If you can hear me, type a yes. My network has been bad. All right, thank you so much. All right, so let's continue. So I'm on the Euro USD, and I have drawn my fib from Monday's high to Monday's low. Now I anticipate a retracement to around 61.8. That's exactly what it has done. Now, after this kind of retracement, I expect an expansion to the downside. So if I draw, there's a tool called Fibonacci expansion. Now, this particular tool helps us to know how much we should expect the market to move after a retracement. So whenever the market retraces to a certain value or to a certain level, most usually around 61.8%, we now expand. So the expansion tool is used to measure the extent to which we expect that expansion to get to. So how low we should expect the expansion to get to. So if I draw the first level, let me change this color to red. This is the first support I'm expecting this market to hit. And then the second one is this down here. These are Fibonacci expansion levels. But one of the problems I'm seeing on Euro USD is the strength in the movement away from the 61.8. So it's not really moving away from here with the strength. It's sluggish. So the movement away is sluggish. But we can anticipate a push to the downside. So on Euro USD, I'll be looking at this. So I'll be looking at the sell on Euro USD, which is actually in contrast to what we see on so on Euro USD, I'll be looking for sell. So if you sell around where the current market price is, if you are selling around this region, stop loss should be above yesterday's high. So your stop loss should be above yesterday's high, the red line you see on the chart, and then your take profit should be somewhere below yesterday's low. So that's how I want to engage. So around the current market price, stop loss above yesterday's high, and profit below yesterday's low. So the green line on the chart is where I'm anticipating that market should get to before finding a reasonable support. So in my opinion, expecting up down to this region. This drop will most likely occur during the 130 high impact move. Remember that from the fundamental calendar, mentioned that I am anticipating the news to turn out positive for US dollar. That's because on the forecast, we are seeing that the numbers are likely to be positive. So if that happens, then there's a high tendency the dollar will appreciate in value. So if that is the case, I will want to see the Euro USD appreciate. All right. So any question on Euro USD before I move forward? So someone is asking, is it possible to use US 100? Can it be possible that US 100 will also decline because the dollar index shall be going? Yes, it's possible. So US 100, if the dollar is going short, if the dollar is going down, then it means that the US 100 should go up. So usually that's how it has always been, because the US 100 is made up of stocks. And what is used in buying stocks in the United States, the US dollar. So if the US index is appreciating in value, then the dollar should be inflating. It means that money is being channeled from dollar to buy stocks. Most times they move opposite. But I said earlier, the correlation of the dollar index and other instruments have not really been following the norm that's dated from what it is. Though I have not compared it with US 100 in recent times, but other currencies like the Euro USD, Pound USD, there's been a slight deviation. So normally, when US 100 is declining, the dollar index should. Sometimes I don't know if it still goes by that. So there's a tendency there might be some variation. That's for that. So if you still have any other question on what we have just discussed, so let me check. So I'm just scanning through the questions I have here. So someone is saying, I think Euro USD is retesting the last high. Yeah, it's possible. It's very possible. So the last high, you mean yesterday's high or this small shadow here? It's possible it can retest. That's why I said the stop loss should be above yesterday's high. So if you can see my screen, the person that asked that question, that is so the person that asked the question, if you can see my screen, you will notice that my stop loss is above yesterday's high. My stop loss is above yesterday's. Yes, so that we can give room for Euro USD to run, somewhere above yesterday's high. If it does that, then our stop loss will be above. Once it strongly breaks above yesterday's high, there's a high tendency we will go higher. If it fails to break yesterday's high, they will most likely run lower to yesterday's low. So that's why the stop loss is above yesterday's high, somewhere below yesterday's low, because giving that room for a retracement higher before a drop. You can wait for that retracement, or you can engage the market at around the current market price. All right. So I think what we have on Pound USD. Let's check Pound USD. Pound USD, just like I mentioned earlier, has kind of been different from what Euro USD is doing. We are looking at Pound USD. We see the massive drop that occurred on Tuesday. So we see the movement down on Tuesday, and we see, so this is what we have on Pound USD. Now, if I draw my fee on Tuesday, from Tuesday's high, extended to Tuesday's low, look at what I've just done. I've extended. So what I'm doing here is from Tuesday's high to Tuesday's low. I have this area where I'm anticipating the market to kind of get to or drop. But as you can see on the screen, it didn't really get to that area. Although it retraced, it was a good retracement, but it did not get to that area. But notwithstanding, it's a good one. For Pound USD, I would wait for the price to most likely run up to this area or drop. So this is what I'm anticipating on Pound USD. So before now, we normally see positive correlation between Pound USD and Euro USD. But in recent times, that positive correlation is no longer there. So Pound USD has been moving slightly different from Euro USD. So I'm expecting Pound USD to run up to around this support area or resistance area before drops. Now, if that were to happen, I would want to see a drop to around I want to see Pound USD drop to around let's see. So this is where I want to see drop. That should be around the 1.32500, around this area. Somewhere down here, Pound USD should all the way down here. And so just like I said earlier, this is in anticipation that the news today is positive for the news is positive for the dollar. Then we should see something that looks like this Pound USD. So the best option for me, or the best what I will be looking at, is a sell Pound USD. For those of us that want to scalp, you can scalp all the way up to this before you sell, or wait for the market to hit this area, sell all the way down. But while you are doing this, do not forget to always place your stop. So in type of trade, I'll be buying within this, I'll be selling within this region. My stop loss just above. So this green line, the red line you see on the screen is where I'll be much comfortable placing it. Stop loss will be placed up here, entry around here with the TP somewhere down here. So that is what I expect to see on Pound USD. Now, one of the things that might change this is if the news turns out to be negative. If the news is negative for the US dollar, then we get something different. So I cannot really get this if the news is negative for the dollar. Else, if it's positive, then we should expect to see Pound USD for yuan. All right. So next is USD CHF. So please, if you have any question, feel free to drop your question. As I'm doing the analysis, I'm also going through the pound CHF. Pound CHF. So this is H4. On H4, we are actually in a range on H4. It's almost like a downtrend, but so looks like a range. But if you move down to T1, you'll notice that throughout last month, we actually ranged. So this is the activity, this is the movement for last month. It's actually a range. So we are ranging. And notice we've been in a downtrend for some months. Then in the month of August, just ranged all through. And here we are in the month of September, no clear price action on the monthly. So this guy is just ranging around, just ranging. And when the market is in this kind of phase, I don't know if well, there might be those that can trade this kind of price action. Personally, I can't trade this kind of price action. I don't even know where to start because it's all over the place. So normally, when I see an instrument behave like this, I will just stay out. I'll just stay out because it doesn't look too good. No clear direction yet. But if we are to go by the analysis we have done on other instruments, then I should anticipate a movement to the upside. Why? If you look closely, we have this pattern. Market drops. So look at this pattern. The market goes up, drops. All right. So can someone tell me what this pattern looks like? Anybody that knows what this pattern looks like? Anybody? So what does this pattern look like? Just drop your answer in the comments. All right. So this is a classic head and shoulder. So what we're expecting from this point is a push. Okay. All right, good. Thank you very much. Yes, correct. So you are all correct. Yes, W. Yes. So that's head and shoulder. So on USD CHF, you see the head and shoulder form, which means in line with what we have done on other instruments, we still expect or anticipate the dollar should appreciate in value. So the classic head and shoulder, where you see the market forming, the market that was once in a downtrend, at the bottom of the trend, at the bottom of the downtrend, now forming a W formation, giving us a W formation or a head and shoulder. Now, head and shoulder in a downtrend, classic reversal pattern. Reversal pattern. So there's a high tendency we might see the dollar push up. Now, notice that for the head and shoulder to be effective, the market has to break the neckline. So this level here is called the neckline. We want to see the market break above this neckline. And if it breaks above the neckline, it will go as high as this level, go as high as this point. So we expect a continuation higher or a move higher in the downtrend into an uptrend. But the uptrend may not last too long, but for the interim, this is what we have. So we can anticipate a buy. And we hope that this news will be the catalyst to push the USD CHF to the upside. If the news turns out positive, like I mentioned earlier, then we should expect to see a higher on pound on the USD CHF. So your best kind of trade, in my opinion, would be to buy USD CHF. All right. So I think that's much we can do for this class. If you have any questions, feel free to drop your questions. Any questions so far? So on USD CHF, we are looking at buy. So we can buy, but ensure that your stop loss is below yesterday's low. So locate the lowest price that was formed yesterday. Place your stop loss below that low, and then your target should be the neckline of the head and shoulder pattern. So your TP should be around the neckline. And if the market breaks above the neckline, then look for another buy from there to the top of this region. So you can buy from where we are up to the neckline, which is this area. And if it breaks above the neckline, then you can still buy from there all the way up to this high. And your stop loss for today should be yesterday's low. All right. So if you have any questions, you can drop. There are no questions, then all we can manage. All right. So no questions. Thank you, ladies and gentlemen. Then see you some other time.